First of all, Melissa, I think that what you're seeing right now is something I had talked about in April and May. The Nasdaq 100 has basically reached its target. And so when you see Facebook become faceplant, down over 34% since the end of July, and then you see Google and Apple getting taken out to the woodshed, this is what I expected. And so I don't think it's over yet. I think when you look at the Nasdaq 100 and the Nasdaq comp, we could easily see, another 5 or 10% downside here. The most important question in all the markets right now is what is the status of the rally off the March 2009 lows in the U.S. stock market, because it is really U.S.-centric at this point. And if you look at it as a three-legged stool, the Nasdaq and comp and the Nasdaq 100 have reached their target off the 2009 lows. And so you've got one leg of the stool that's broken. And the question is, can the S&P and the Dow still carry the market higher?
You know, a lot of people today, Bill, are looking at the chart of the small caps, the Russell, and pointing to the so-called death cross when the 50-day crosses to below the 200-day, indicating a loss of short-term momentum. Do you see that, forecasting weakness in the broader indices? What does this mean in your view, if anything?
Yeah, well, I don't think we're done right here. I think the first area that you're going to have to watch the S&P around 2,700. The S&P's got a hold in front of there. That would be, to me, the first kind of level in the area where we are right now that will be a test to see whether the market can hold in right now. But again, when you look at the U.S. markets right now, the key question is this 2009 rally still intact? And like I said, the Nasdaq comp, Nasdaq 100 done. S&P, I still think, is the most bullish of all. I mean, we still have some pretty decent upside objectives here, 3,300, 3,400. And the Dow, that's kind of the one that'll be the swing right here. You start to see the Dow below 25,000, then I think you have a situation where the Nasdaq is broken, the Dow is starting to roll over, and more than likely they're going to end up dragging the S&P lower. If the market is going to hang in here, you want to see the Dow above 25,000, you want to see the S&P hold here in front of 2,700, and then I still think we have the potential to at least retest the old highs, if not go higher. But it's still very much in flux, and I don't think people understand or appreciate the fact that one of the key drivers of the market, the Nasdaq comp and Nasdaq 100, are basically done off the 2009 lows.
So just quickly, Bill, if you see some more upside potentially in the S&P 500, that would imply that you see sectors outside of technology holding in. So what are the strongest sectors at this point?
Probably healthcare, Melissa, right now. XLV, IBB, they still look good. But I'm concerned about the broader market as well, because I think the banks are in trouble. I think the industrials have issues. And so the mentality has been buy the dip, buy the dip. That's what you've been paid to do since the 2009 lows. And what I've been warning about on this show back in April and May and as recently as October is that we may be at the point now where this whole 2009 rally is beginning to roll over. And as I said, the key tell right now is the Nasdaq comp and Nasdaq 100 have reached their target. They still have more downside to go from here.